Here's the point. You go long of the market. It could be euro dollar, it could be S&P, it could be anything that you trade. Pound, yen.
Okay guys, today I'm doing something different here. Today is Thursday the 6th of July. So I've got a live webinar here. I thought he'd be doing live trading. I want to trade against him just to see, just so I could show you how I do compared to him. So this is Neerav, who has been advertising his trading system strategy, whatever he teaches online, Facebook, YouTube for a while now. So we've got his online webinar. Let's see if he takes some live trades here. I'll be trading the same market and I'll show you my trades compared to his. So it will be something interesting for you to see.
I think that the majority of this risk is then passed on into liquidity provider in between the broker and the banks themselves. But the reality is it isn't. And why would a broker want to pass this on? Because if they've gone short, they've got this short exposure, they then need to buy to cancel it out and be neutral. There will be some natural hedging that takes place. Obviously, there'll be retail traders going.
I am seeing a good trade 100%. Setup here.
So you can imagine how much money they make from you, because...
So what I want to do here, so I want to take a short
deposit to them, because they'll just collect that, right? Now let's compare that to how an institution works, an institutional investor. Right, an institutional investor
order filled.
Will do the same thing as you. They'll go long.
Order filled.
Right.
So I'm trading the
they'll have their broker.
E-mini S&Ps here.
The broker is now short. The same thing as the position you were in.
Order
but
filled.
This time the broker will
short
most
5 contracts,
hedge that position and go long. Why? Because they don't want net exposure. Why is that? Because obviously they're facing an institution like an investment bank, a hedge fund, a real money fund. They know these guys know what they're doing. They're also not using, all this silliness. I see people using all these random lines. They don't use that stuff, okay? They're using proper institutional tools. And
I mean, this guy is not showing any live trades here. It just looks like a recorded webinar. Hopefully there will be some trading later on.
Now, in case
I want to take this trade here while I'm watching this.
Be confused. It's very straightforward, all right? Just to show you how similar the two sort of scenarios are. This is you, right? Retail trader. This is an institutional trader. There's no difference. Really, you're a human being. Here, there's a human being. Okay, so don't think there's any difference between the two of you. Right? You've both got long. That person's got long as well. Okay, it's the same thing. And then you're going to a broker, it might be a retail broker, it doesn't matter. This guy's got institutional...
Right, so my analysis here, you can see market came down, broke the structure,
bank, a tier 1
coming back up to retest. Short just 5 contracts.
Get too worried about these two sides of the equation. It's this.
Are we looking at this level, right? 44, 40?
The tools
for some
are
profit
the
taking, unless we get a deep dive.
And why we see recap.
Drop from here, come towards...
live trading in a moment. I just want you to realize,
just place some orders there,
that because you are trading like this and brokers know that your chances of success, you may think you've heard this 95% or 5% do okay. They don't, okay? It's 0%, okay? Make money using this stuff on a sort of consistent basis over the long term, okay? What that means is the retail broker, the majority of the time, does not need to do anything with your position except take the other side and collect your money. And that is the business, okay? Institutional business is different because, like I said, they're using proper tools.
Okay, I can see
they
some
know what they're doing.
Order here.
A broker cannot afford
big order
to just sit there and do nothing, all right?
Order filled.
That's why I said at the start, I really want you to think about
order filled.
Which side of the fence do you really want to be on, right? Do you want to be on the institutional side where they're doing proper things,
and I'd like to go back in once if we go back up,
or do you
otherwise
want to
I'll hold these 2 contracts. You can see a big order here as well. You can see how the market retraced, jumped back up.
Then you need to be with reality and see the
from that level that I was watching.
But the point is, if you're using this stuff, and the broker is not really that bothered.
Place some more orders here.
He's quite happy
if you
to
get
do
a
nothing
pullback,
about it and just collect your money. you need
Get
to
some more
be
fills.
seriously thinking whether you're better off giving your money to charity. Okay, and we're going to cover that.
Okay, that was
today.
too loud,
the
so I'll
point
just
is, I'm
reduce the
telling
volume
you
there.
all this stuff, and you're probably thinking, Envy, that's great. You've worked in an amazing institution, one of the top institutions, and you're telling us all of this. But what are we going to do about it? It's nice. You're basically telling us we're wasting our time, but what do we do?
I really haven't seen anything interesting so far on Neerav's webinar.
We're going to cover that in some.
I was hoping he'd take some live trades, and I could compete with him and
do you remember how I said
see
the
how
only
we do.
difference between you as a retail trader
Placing one more
and
short order here.
traders,
I'd like to take some shorts while the price comes back
a lot
up
of
to
people
test
get
the
worried. They think, oh my God,
resistance here
what institutions
for
are
another
doing,
drop.
it's all behind closed doors. I don't know what they're doing and how the trading world works outside of what I'm
Order
doing,
filled.
like in banks, etc. Exactly the same.
Here we short
Okay,
3.
like I said, they're just human beings like you. These guys, they're just human beings. They're trading
Talking
with
about
brokers as well, just
human
like
beings.
you are. They use brokers. It might be obviously a slightly more
Order filled.
larger
Order
broker.
filled.
Right, that's the
than
pullback,
yourself,
and we've
because
got some
obviously
orders
they're
in.
Order filled.
size. The only
I'm short
difference
6 now.
is this.
You can
As
see
I
why I
told
took
you.
profits here, guys. It's pretty
Order
visible.
It's quite a big difference. Obviously, it's a huge difference.
Order filled.
But
Okay,
the
I'm
point
short
is,
8.
That's where you're focused.
Average price of
Okay, not
44,
on anything else.
44.50.
Okay, just focus on that.
Got a
which is
good
what we're
good
going
fill
through
here.
now. And just to hammer that point home, the irony, and that's the point here, where you are using technical analysis, simple candlestick charts. Okay, and obviously that's what retail education is about. I've never seen that in my life. When I was
Well, I don't use candlesticks anyway. I use bar charts.
Hopefully you see it as me.
I think bar charts are much
because if I don't tell you, who else is going to?
better to use.
Waste the next 5-10 years of
They
your
give
life
a better
and then
picture
realize yourself. So I'm trying to tell you now
compared to
that this does
red
not
and green
exist
candlesticks.
in the real world of trading. And I'm going to show you what does.
So he is right on that.
Using fundamental research, and I don't mean the sort of stuff I see retail traders doing with their calendars and all. I'm talking proper fundamental research. We'll have a look at that today. Order flow. Okay, they'll be looking at client transactions.
Cross back down, price will come back down here again to support and maybe lower.
They'll literally be plugged.
Got some support here on the 5 minute, catching up.
Customer data, customer flow, which we're going to have a look at today.
Get the price.
Okay, so
Scale out some of my positions here at support.
Okay, so
order filled.
Now, one thing I want to talk about, and we're going to get into some proper analysis and live.
Okay, I'm out of 2.
So definitely
Still got 6.
Around for, and don't worry, it won't take more than about 20 minutes or so to do all of that. I just want to hammer
important
this
to take your profits when we come towards support or resistance
when
levels.
I watch
order filled.
And notice I've never mentioned.
Okay, I've got 5 left.
I've got nothing
4.
against any one individual.
Order filled.
Big order here.
Or social media.
You can see
I'm sure everyone.
Price got rejected from here.
But the point is, you never hear this spoken about. So that is why I'm going to tell you.
Big order.
Once more.
Once that order goes, I'll have to close this position.
Think is more profitable for
a big order here as well. Let's see if the price drops back down.
What do you think is more profitable for a broker to do? Do you think it's more profitable if they know that you are going to lose on the majority of your trades? Do you think it's more profitable for them just to
some orders here?
Order filled.
Okay, I've just got 1 left.
Or do you think it's more profitable for them to pass your
got
trades
some orders coming in on the
really
bid.
All they're going to earn out of you is some meager commission.
They try to get out.
Okay, so either they can keep 100%,
okay, I'm out of the market.
They can keep, like, it won't even be 1%, it might be 0.5%.
You can see
okay, nothing.
904, 100% profitable trades.
Lucrative for them to
while the webinar is still going.
The reason I'm mentioning this is because
can expect the prices to come down a little bit more towards the support here. Got a big order sitting. This could be a fake order. Let's see if you can get another short.
Why? Because they're all part of this, right? If you notice, again, I'm not mentioning any names. If you notice any educators, videos,
I like to
links,
go back short again.
Links to brokers, links to this, affiliate links to that, links.
Order filled.
Okay, I've got 1.
At the end of the day, they all want a piece of your pie. Now, I'm sorry, but that's the truth. It's your money, and you're dishing it out to all these people. Brokers, affiliates, retail educators. They're all basically having a piece of your pie. And I know this is controversial, but it's true. But I'm not going to mention a single name. But I've actually had very large.
Got a
retail
nice
educators come
volume
to
area
me
here
and actually ask me to show
on
them
market
how
profile. A lot of
institutional
contracts
trading works, because
taken
they realise that what they're doing
at
is
Order filled.
I hate to say it, doesn't
443.75.
belong on planet
We
Earth.
short
I can't
4.
think of a better way to say it. You can see the
We'll
difference
try one more
between the
here.
two.
Got a big order
I've
coming.
said it several times. Let's
Order
actually
filled.
get
Big order
into
there in the
some
market. I'm
analysis,
short
right?
5.
So the point is, okay, you get it. I said it quite a few times now.
The market
that
may start dropping from here.
obviously what institutions are doing.
Order filled.
Okay,
The
we got
difference
6.
is really in where the tools, right? It's the tools. It's the tools. Everything else is very
We cancel
similar.
these.
You know,
Big order
we're
sitting
both
here.
kind of trying to
Once
achieve
again,
the
take my
same
profits
thing,
as the
right?
market
Make
comes
money
back
and
down.
obviously take trades, take risk. We're all doing
This
the
could be a
same
fake
stuff.
order
We
here.
have the same goal.
So as
It's
soon as
just
the
the
price
way we are doing
approaches
it
this
different.
level here, this may
Now, what institutions do
disappear.
differently in terms of their tools
The
is
order may be
firstly it's a
cancelled.
mindset, right? They're running it like a business. They understand that business is out there. You know, if you think of Amazon, you think of all of these companies here, you know, large investment banks are doing something very
Nobody's
similar.
responded to
They
my
realise
question.
that trading is a business and they need to obviously dig a bit deeper and actually start looking at proper data. Otherwise, they've got no hope. They might as well just be doing this stuff, right? Well, any child could do this, really. If you're being quite honest with yourself, you know, ask if you have a son or daughter, ask them to do this, and you'll be surprised they can actually do this. So really, it's obviously meaningless. Obviously, you know what banks are doing and institutions. Like I said, they're no more special than you. There's people like you and me. I mean, myself.
It's a good area to
do that. They're just approaching things.
take some
so
more
let's
here.
Do that.
Try to
let's
go
do
up
that
to
now.
8.
It's the second part of the session today. I really appreciate so many of you turning up.
Order filled.
And sticking around. And
Okay, we
I
short
want
7.
to give you something in return, rather than just lecturing you and telling you that what you're doing is, quite frankly, not correct. So let's actually set you on the correct path, right? So we're going to do this. Can download.
We short 7.
So I know some of you trade equities.
I'll take some
of you
profits
trade
again once
crude
we
oil, but
come
some of you trade
approaching
Forex,
price
not a
comes
problem.
approaching
Some
the
of you
support
trade
level.
crypto. But do you understand how they've kind of been moving together recently? Is there any way you could use kind of the analysis on one to perhaps aid you with your analysis on another? You may or may not be surprised to know that recently, and this happens quite often,
It's talking about the correlation here.
Upwards.
I
Right?
used
So you can see here,
look at other
the
markets, but
equity
now I
market.
don't anymore.
See, I've
It's all
put
in the
a
price.
couple of currencies here, dollar, yen.
You can't
and
compete
yen.
with the bots
And
because
don't worry if a lot of this is quite
the
quick for
algorithms are
you.
keeping up with this stuff.
I'll give
And
you
all
another
you need is just,
opportunity to see
you
this
know,
in
one
the
market
future,
to focus at.
as in if you get the recording or whatever. So don't worry too
You don't
much.
want to be
Just
looking
try
at
to,
5 different markets
pay as
to
much attention as you can. I'll try and obviously go
get a
as slowly
direction
as
on a
possible,
particular
but,
market that you're
all
trading.
the markets potentially that you trade in here, and you can see it for yourself. They all move together. Now, this is important because banks will obviously be using that information as sort of preparation, and this is what banks are really doing. So they'll say to themselves, okay,
I'm going to scale out of some of my positions as I'm
we've
watching the
obviously
webinar
had a
here as
bear
well.
market last year, right? 2022.
So
we
we're
had a
still
bear
short
market.
6.
How does that compare
I got out on 1.
to previous bear markets? Well, in previous bear markets around this time,
Market is thin here, so
significant.
pretty much expect the market to drop here.
Right, so
however,
Order filled.
the support can hold and price can move upwards again.
Potentially, and we did have although you could call it a dead cat bounce with the .com.
We got filled on one more. We got 5 left.
Where the bottom of the market was slightly later. But if you look at the housing market, bear market, it was around this time, so about 1 year from the peak in the market, which was at the start of last year, January 2022, when the market was obviously at all-time highs. We're actually
I've got 4 remaining.
Order filled.
3.
Where in a previous significant recession, we've hit a bottom. So that suggests that potentially, this
2.
could have some legs back to the upside, right? And do what? Go back to all-time
Close this
highs.
here.
Order filled.
If the past
And just one contract left.
Now again, we
and
need
we're out.
to have a look at that in some more detail.
You can see here my trades, guys.
Potential scenario, given that
This is real trading, guys. What he's teaching is this is all talk.
It's quite achievable, right? That in the near future, traders want to do things that are achievable, and that is achievable, right? And if we have a look at some, do you remember the whole point of this exercise? to explore.
Take a look at my average trade time, 4 minutes 51 seconds. Longest trade time, 8 minutes 11
Another
seconds.
thing that banks will look at.
So I've traded a total of 36 contracts here.
I know this is.
And we made $1,283 after commissions. Only $54 in commissions.
And you've seen why it's important to do that.
And look at the market
Final thing, right?
coming back up right from the support level where I got out the last contract.
Over the last kind of.
He's talking long term here, you know.
You can check that on my YouTube channel.
We are scalpers. We want to be in and out of the market. I don't care about this stuff where the market will be 6 months from now, a year from now, 3 years from now.
Now,
you know,
just finally,
we're not investing billions of dollars here or pounds in anticipation, hoping that the market will move in a certain direction for our capital to appreciate. We're trading short term. We're in, we're out. We make our money. Done for the day.
As we know, things have been
pretty much done here. 20 minutes of trading, and
the jobs market, which unfortunately I didn't bring up.
You can see the webinar is still going.
The data for has been very strong, right? The jobs market has been very strong, but then you need to ask.
So I'm seeing a short here, guys.
Get to do that today, so stick around for just a few minutes. So the question is, how do you actually do this yourself, right? Well, you got to start thinking like a bank employee, right? So a bank employee is
so I'm short
going to be getting taught.
Got 2 more orders there for a total of 5.
These type of things that I mentioned before, you know, order flow. They're not looking at, you know.
I want to catch this move down, possibly another move down lower. We've taken out the stops, market wants to come back down again.
To think like a bank employee, you really need to know kind of what does the training look like.
If we exceed these highs, I'm going to close this position
I'm going to show you
at 44.50.
So
we broke in highs here, reached a peak point, minor resistance.
You've got to start thinking like a business.
What I want to do here is catch the move down if the market does want to drop from here.
Barclays, where I work, or Goldman's, or even a business like.
If it doesn't, it may continue retracing further.
They're going to put you through a training.
You can see it's coming down.
Doing all this stuff that I see in retail.
See a big order here. I'm going to try scalping.
Right, months 1 to 3, we got a plan for you. How we're going to, you know, make you skilled. How we're going to skill you.
Order filled.
So months 1 to 3,
you do a business
order
plan.
filled.
You learn basic supply and demand. Some of the tools that I showed you today. This is what you're typically doing in a bank.
Order filled.
Months 3 to 6.
You can see there's an order here.
Filled.
And I'm out with 4 contracts.
They're putting money behind you, right? They want to see you on the
and you can see rejection from support there.
What you're doing is going to make them money.
We're up 1471.
Right? As a business, they're not keeping 100% of your deposit. They do care if you win or lose. So
I hope you enjoyed this trading session. I look forward to recording, making another video for you. Hopefully with another trader who wants to trade live, and I can trade along, and you can watch us both
obviously very
use our trading styles.
Retail, right? None of this stuff.
So thank you for watching. Take care, and
there's no promises.
have a great trading week.
Riches, you can make a serious amount of money. You've seen that. I've shown you.